Well, let's get our next management on the show. KEI Industries, the numbers look pretty okay. Mr. Anil Gupta, the CMD of the company, joins us on the show. Hi, Mr. Gupta. Good morning and good to see you. Well, the past quarter was, showed signs of improvement, particularly on the demand front. And I'm looking at your nearest peer. It appears you grow better than them. Havells is what I'm talking about in terms of revenue growth. Now, you've given us guidance in the past that for FY25, you want to grow by 15 to 16%. Given that the last quarter was quite strong, do you want to up this or do you want to change it from 15 to 16%? So tell us about that. And on the revenue side, exports will be far better in the coming year in comparison to the past year. So what should the growth look like out there? If you could give us some numbers.
Good morning. Thank you for inviting me to your show. As I said in my last interview with you, I think demand is still very strong. And you have seen our numbers in Q4. Overall, in the full financial year, we have grown by 17.3%, which I guided in the beginning of the year. And this year also, we expect to grow by 15 to 16% by enhancing the capacities in our existing plants. So far as exports are concerned, we expect to grow substantially. We have grown in this year by 58%, and I think that we can grow by 50% in this financial year as well, as we have a healthy order book of exports also, and a very healthy inquiry flow also.
Got it. All right.
Yeah.
Got it. Okay. So you've given us the key numbers out there. What about margins? You told us that 11% margins is doable in FY25 and that input cost is all passed through mostly. 11% by which quarter? From Q1 itself, or you're referring it to as an average for FY25?
In the Q4 this year, last year, we have grown by 11%. We have done 11% EBITDA. And overall, I see that we can achieve 11% EBITDA in the whole year. There may be minor deviations from quarter to quarter because of the because of any impact of extra expenditure in a particular quarter. But overall, I can see that, I presume that we can do 11% in the whole year.
Mr. Gupta, hi, good morning. Prashant here. Good to speak with you as always. Now, I want to kind of go back to what we spoke about last time, which is input prices, copper prices, etc. Metal prices are at record highs. And I remember last time you were saying you're saying that if say copper goes to say $10,000 the LME or something, then that could cause some temporary pause in orders. It's a pass-through for you, that we understand, but it is like a one-way move. And I heard some calls for $12,000 of copper, which will then balance the market. I don't know what your thoughts are, Mr. Gupta, here in terms of whether it's going to start to affect demand in any which way.
Prashant, I don't think that it can impact the demand in a, longer perspective, because the projects which are undergoing, they will not stop by just because some commodity prices have gone up. And those contracts have limited time period for execution. Otherwise, penalties are, attributed to them. So they have to perform. The pauses are always very temporary, maybe 15 days to 30 days or maybe 45 days in new order booking. But I have seen even in April also, we have seen very healthy order book booking, new order booking in April also. And I don't think that it will be a big impact. And always our cost impact is passed through. Whatever material prices or LME prices are going up, we are passing on to the customers in our new offering, new tenders, and also revising our list prices every 15 days or maybe earlier.
Understood. Mr. Gupta, hi, this is Sonia here, and always good speaking to you. So you were telling me about the healthy order book, right? Can you give us some numbers? What is the current order book right now? What is the order visibility that you have over the next 1 year, 12 to 18 months? And what is the kind of order execution that you're looking at? If you can share the numbers with us.
At the moment, our order booking is around 3,500 crore. And in our type of business, order booking numbers will never be too big because our EPC business is small. For the cable business, we are taking the orders and maximum within 3 to 4 months, we are executing it. In retail business, the orders are coming and they are executed maximum within 15 days. So and they are never reflected in the order book. So order book largely relates to B2B orders and EPC orders.
We have this number, 3,531 crores. I'm just trying to understand that what is the incremental order visibility that you would have in FY25 and what is the bidding pipeline looking like? What is the expected conversion? If you can share some details with us.
Bidding pipeline is strong. So far as wire and cable is concerned, EPC, we don't bid too much because we have contained that business within 500 crore. So we have adequate orders to get that revenue in this year. And I think in domestic as well as export market, the bidding to EPC contractors or to the utilities is quite strong. And we expect that we should be able to grow by 15 to 16% in this financial year as well.
Okay, all right. Mr. Gupta, I recall over the last few years when we have been chatting, you have been telling us that the B2C business will gradually move to around 50% of the mix. I think as of now, it's around 46%. So in all probability, in the first half of FY25, you get to that mark. How does this change things? Couple of questions here. What is the margin difference between B2C and B2B? Point number one, if there is one. And also, if you could tell us, how does it impact the working capital days? Please go ahead.
Yes, we expect to reach 50% level in this financial year in B2C business. And so far as margin is concerned, margins are almost similar to B2B because we always, basically it has improved our cash flow cycle. If you have seen, our debtor days have gone down by 15 days in this last financial year compared to previous year. And I expect that there is a possibility of going it further down by 7 to 10 days in this financial year. So it is definitely improving our cash flows, and that also always improves the margin.
Oh, got it.
What about a new capacity, Mr. Gupta? I think you'd said that the Silvassa capacity, the cables capacity, will come up in the first week of April. Then I think the Bhiwadi will be commissioned by the end of June. Could you give us an update?
Yeah, it is on track. Silvassa capacity has already been commissioned and in the commercial production. And Bhiwadi new capacity will be commissioned by end of June. So far as new capex coming up at Sanand near Ahmedabad, that is in full swing in terms of construction. And I expect that first phase should start by April or May next year in the next financial year.
Okay, Mr. Gupta, we leave it at that. Thank you so much for joining us. Always great, learning from you and understanding more about the company. Demand is very strong. Expect growth of 15 to 16% in FY25. When